Japan is a country where ancient traditions blend seamlessly with modern success. But did you know that behind its technological marvels and cultural richness lies a hidden blueprint for building wealth, one that the rest of the world rarely talks about? Today, we're diving deep into the 10 Japanese money secrets you were never taught, the ones that create silent millionaires without flashy cars or viral TikToks. Curious? Let's get started. When people think of Warren Buffett, they think of Coca-Cola stocks and American railroads. But few know that in 2020, Buffett made a surprising move, investing over $6 billion into 5 major Japanese trading companies. That's right. The Oracle of Omaha looked east for stable, long-term wealth. But why Japan? Buffett admired Japan's discipline in business, long-term strategies, and a culture that values stability over risky, short-term gains. These companies weren't Silicon Valley unicorns. They were centuries-old giants that kept growing silently. It's a perfect example of how Japanese wealth building isn't about flash. It's about longevity. Buffett saw what most investors overlooked, a culture of wealth that thrives on patience, community, and legacy. If the world's greatest investor is learning from Japan's money playbook, maybe it's time we do too. But before we dive into these secrets, make sure to subscribe and hit the bell icon. Trust me, you won't want to miss what's coming next. Ready to unlock the first Japanese money secret? Embrace the art of patience and profit strategically. In Japan, investing isn't a sprint. It's a marathon. While the Western world chases quick returns and day trading thrills, Japanese investors play the long game. Their secret? Patience isn't just a virtue, it's a strategy. The Japanese stock market, especially the Nikkei, thrives on stability. Japanese investors prefer blue-chip companies, dividend-paying stocks, and real estate investments that grow steadily over decades. This patient approach stems from cultural philosophies like Zen Buddhism, which emphasizes calmness, balance, and foresight. Unlike the get-rich-quick mentality, Japanese investors cultivate what they call quiet wealth, prosperity that builds beneath the surface. Moreover, the Japanese market's structure encourages this patience. Many local investors avoid high-frequency trading, focusing instead on strategies that yield consistent, long-term returns. The 1990s lost decade taught Japan harsh lessons about speculation and market bubbles, pushing modern investors towards stability. Let's turn the spotlight on you. How often do you check your investment portfolio? Daily? Weekly? Imagine if you only checked it once a year. Could you handle it? Here's a piece of advice. If you find yourself checking your portfolio daily or weekly, try to shift your focus to the bigger picture. Continuous monitoring can cause anxiety and lead to hasty decisions. Imagine only reviewing your investments once a year. This might allow you to stay more patient and composed, ultimately leading to better long-term results. And here's a touch of irony for you. While Western investors lose sleep over a 1% market dip, Japanese investors sip matcha and wait it out. All right, let's dive into our next exciting topic, exploring opportunities beyond stocks. You might be well acquainted with the age-old advice, never put all your eggs in one basket. Japanese investors know this better than anyone. They diversify beyond stocks, into real estate, fine art, even bonsai trees. Yes, those miniature trees can be worth thousands. But here's where it gets interesting. Many Japanese investors also look into commodities, private lending, and niche markets like rare antiques. Why? Because wealth in Japan isn't about the get-rich-quick scheme. It's about sustainable growth. One major diversification strategy is investing in foreign markets while maintaining strong domestic holdings. Japanese corporations often hold cross-shareholdings with partner companies, creating a web of financial stability. This interconnectedness minimizes risk while promoting collaboration. Additionally, some investors turn to alternative assets like whiskey casks or rare manga collections. Believe it or not, both have seen skyrocketing values in recent years. This kind of cultural investing taps into Japan's appreciation for craftsmanship and scarcity. Think of a Japanese investor's portfolio like a traditional bento box, small, balanced portions that together make a fulfilling meal. Consider this. What's in your investment bento box? Are you missing an ingredient? Reflecting on your investment bento box, it might be time to evaluate if all the ingredients complement each other. Diversification can help you manage risks and seize opportunities across different markets. Don't be afraid to adjust your strategy to ensure a well-rounded portfolio. Moving forward, let's talk about a lesser-known real estate strategy, the hidden power of Japanese REITs. You might think real estate investing means buying properties and dealing with tenants. In Japan, it's much simpler. Thanks to REITs. Japanese REITs are some of the most stable and high-performing in Asia, but most Western investors have no clue they exist. These REITs focus on commercial properties in high-demand areas like Tokyo and Osaka, offering consistent dividends without the hassle of property management. Their focus isn't just residential, but includes office spaces, retail complexes, and even logistics hubs. Investors are drawn to Japanese REITs due to their transparency and the country's strict regulatory environment. Unlike some markets prone to volatile real estate bubbles, Japan maintains balanced oversight that ensures the stability of these funds. In 2001, Japan launched its first REIT, and within a decade, it became one of the largest in the world, despite Japan's economic stagnation at the time. Why? Because investors trusted the stability of tangible assets. Another reason for their popularity? Tokyo consistently ranks as one of the most expensive real estate markets globally, making fractional ownership through REITs an accessible alternative for smaller investors. Would you rather own one house or a slice of Tokyo's entire skyline? A single house offers security, but what if you could own a piece of Tokyo's entire skyline? Diversifying your investments can help balance risks and rewards, providing you with a more resilient portfolio. Embrace the potential of broader investments and unlock opportunities in the world's most dynamic cities. Now let's switch gears and dive into a bold investment philosophy known as the samurai strategy, another money secrets you were never taught. Japanese investors are known for their conservative approach until they make their big bet. This is called the samurai strategy. Take one calculated, high-risk move in your lifetime, then manage it conservatively. It's why many Japanese millionaires are business owners. They took their big swing by starting a company, then shifted to stable investments afterward. This strategy draws from the historical code of the samurai, where discipline, honor, and timing are paramount. The idea is simple. Take one bold move that can set your financial future in motion, then protect it with careful planning. A famous example? Masayoshi Son, founder of SoftBank. He once invested $20 million into Alibaba in the late 1990s, a high-risk move that eventually turned into a $60 billion windfall. One calculated risk, lifetime returns. Another key element of the samurai strategy is the concept of Kaizen, continuous improvement. Even after taking that big risk, Japanese investors continuously refine and adjust their strategies to maximize long-term gains. This mindset ensures that their initial success is not a one-off event, but the foundation of sustained wealth. In the West, you're told to take consistent risks for higher returns. In Japan, it's one big risk, then a lifetime of playing it safe. Both can work, but which suits your mindset? If you had to take one financial risk in your life, what would it be? By the way, if you're enjoying the video so far and want more topics like this, comment the word "more" so I know. Alright, let's uncover the power of Japanese dividend strategies and how they can enhance your financial portfolio. Japanese investors often favor dividend-paying stocks that provide stable, passive income over time. This silent income builds wealth without the volatility of high-risk assets. Japan's economy has long prioritized sustainability and consistency over aggressive growth, making dividend strategies particularly attractive. Many Japanese blue-chip companies like Toyota and Sony have a history of consistent dividend payouts, making them favorites among local investors. But there's another layer. Investors often reinvest their dividends rather than cashing out, allowing for compounded growth over time. This snowball effect helps build significant wealth quietly and steadily. Interestingly, Japanese dividend investors often focus on industries that are less cyclical, like healthcare, utilities, and consumer goods, ensuring a more predictable income stream. This focus on stability over speculation is a cornerstone of Japanese investment philosophy. Another key strategy is focusing on dividend aristocrats, companies with a long history of increasing dividend payouts. In Japan, firms that consistently grow their dividends are highly valued as they reflect financial health and a commitment to shareholders. Additionally, Japanese investors often take advantage of tax-efficient accounts such as NISA, Nippon Individual Savings Account, which allows tax-free investing for a set amount annually. By using these accounts for dividend stocks, investors maximize returns without losing a chunk to taxes. Another growing trend is investing in high-dividend exchange-traded funds, ETFs, which offer exposure to multiple dividend-paying companies while diversifying risk. These funds provide a hands-off approach for investors seeking steady income without the need to actively manage individual stocks. What's your ideal passive income source? Would you go for steady dividends or something more aggressive? Leave your comment below. I would like to know your thoughts on this. Let's keep this momentum going and talk about how budgeting can influence investing. The Cabo method isn't just about budgeting, it's about mindful decision-making. Japanese investors apply this same philosophy to their investments, focusing on intentional, strategic moves instead of impulsive trades. Originating in the early 1900s, the Cabo method was designed to help Japanese households take control of their finances. But forward-thinking investors adapted this concept, applying its principles to managing their portfolios. Instead of simply tracking expenses, they asked deeper questions like, is this investment aligned with my long-term goals? Or, does this risk justify the potential return? This disciplined mindset helps investors avoid the common pitfalls of emotional trading. For instance, during economic downturns, instead of panic selling, Cabo investors focus on the bigger picture, rebalancing their portfolios and seeking undervalued assets. It's not just about avoiding bad decisions, it's about making the right ones. Japanese investors often use Cabo principles to create a diversified and balanced portfolio, ensuring that their money works efficiently without unnecessary risk. Moving forward, time to explore how community ties influence investing in Japan. In Japan, trust isn't just cultural, it's financial. Tanemoshi is a traditional system where small groups pool money and take turns receiving lump sums for major investments. It's not a bank loan. It's not a Ponzi scheme. It's pure community trust. While rare today, similar cooperative investment models still thrive in some rural communities and among tight-knit business circles. These informal lending clubs offer more than just capital. They foster a sense of responsibility and mutual support. Each member knows that their turn will come, which encourages accountability and community-driven success. In modern Japan, Tanemoshi has evolved into formal cooperative banks and credit unions that still carry the spirit of community investing. These institutions often outperform traditional banks in terms of member satisfaction and financial literacy. One of the unique strengths of Tanemoshi is its ability to fund small businesses and startups that might struggle to secure traditional bank loans. This grassroots financing model has been instrumental in nurturing local economies and fostering entrepreneurship. Additionally, The communal nature of Tanamoshi promotes financial education within the group, as members often share investment strategies, business advice, and risk management tips, further strengthening the community's economic resilience. Studies show that communities practicing cooperative lending have lower debt rates and higher savings, proving that sometimes the oldest systems still outperform modern finance. Would you invest with your closest friends? Or would that end in chaos? Here's something to consider. Partnering with your closest friends on investments can be both exciting and challenging. Mitigate potential issues, establish clear roles, document agreements, and commit to regular check-ins. This approach will help you navigate the complexities of mixing friendship with finance, aiming for success without jeopardizing your relationships. Let's keep this momentum going and talk about how Japan survived financial shocks. Japan has faced economic bubbles, natural disasters, and global recessions, and still stands strong. The secret, crisis-proof investment strategies that prioritize stability and adaptability. One major approach is the emphasis on risk mitigation. Japanese investors often maintain larger cash reserves compared to their Western counterparts, ensuring they can weather financial downturns without needing to liquidate key assets. Another strategy is sector diversification. During Japan's post-bubble era in the 1990s, many investors shifted from high-growth sectors like real estate to stable industries such as energy, utilities, and consumer staples. This shift ensured that even in turbulent times, their portfolios remained resilient. Additionally, Japanese corporations frequently adopt conservative debt policies, limiting leverage and focusing on long-term sustainability. This approach minimizes the fallout during economic downturns, protecting shareholders and maintaining steady dividend payouts. A lesser-known tactic is the use of counter-cyclical investments. Japanese investors often allocate funds to assets that perform well during market downturns, such as precious metals or government bonds. This strategy acts as a buffer during periods of high volatility. Moreover, Japanese investors place a strong emphasis on disaster preparedness, an outlook shaped by the country's history of earthquakes and natural disasters. This mindset extends to financial planning, where many investors build disaster funds alongside their emergency savings, specifically designed to withstand large-scale economic disruptions. Let's talk about Japanese government policies and how they play a role. Institutions like the Bank of Japan actively implement market-stabilizing measures during times of crisis, giving investors added confidence in long-term stability. This close relationship between government and financial markets creates a unique safety net for local investors. Here's a thought to ponder. Could your portfolio survive a major market crash? If not, it might be time to rethink your strategy. Next up, let's dive into how Japanese families plan for the long haul, across generations. In Japan, wealth isn't just about you, it's about your grandchildren. Japanese families focus heavily on legacy planning, using strategies like family trusts, intergenerational real estate, and life insurance policies designed to transfer wealth smoothly. The key? Avoiding heavy taxes. Japanese millionaires use legal loopholes and long-term planning to ensure their wealth outlives them. One strategy is the use of gift tax loopholes, where wealthy individuals gradually transfer assets to heirs while minimizing tax burdens. Another common method is investing in properties with stable, long-term yields that can be passed down through generations. Estate planning is so ingrained in Japanese culture that entire industries exist to facilitate seamless wealth transfers, from specialized tax advisors to legal firms focused solely on inheritance planning. Meanwhile, Uncle Joe is still arguing over Grandma's will for that 2005 Toyota Corolla. Another take. Plan for the future. Are you investing for quick wins or for lasting wealth? Building for 50 years from now means embracing patience and strategic planning. Cultivate a diversified portfolio, reinvest your earnings, and focus on sustainable growth that will stand the test of time. Finally, let's explore how family businesses play a hidden but powerful role in Japanese wealth. Small and medium-sized family businesses are the backbone of Japan's economy and a hidden engine of generational wealth. These enterprises often pass through generations, maintaining stability and community ties. In Japan, family businesses are deeply rooted in tradition and often focus on long-term sustainability rather than rapid expansion. Many of these businesses operate under the principle of shin-ease, a term used to describe long-standing family enterprises that have been around for centuries. These businesses prioritize legacy and reputation over aggressive growth, fostering customer loyalty and community trust. Companies like Kikkoman, the soy sauce giant founded in 1917, are prime examples of how family-run enterprises can thrive for generations. Succession planning is also a critical aspect. Japanese families invest heavily in preparing the next generation to take over, often starting mentorship from a young age. This ensures continuity and preserves the company's core values. Another interesting aspect is the use of adopted heirs, a unique Japanese practice where business owners adopt capable adults, often non-family members, to ensure the continuity of the business if no biological heirs are suitable. Here is a question for you. Would you run a family business, or would working with relatives drive you crazy? And there you have it. 10 Japanese money secrets you were never taught. From mindful investing and silent wealth strategies to crisis-proof portfolios and family business legacies, Japan's financial wisdom offers timeless lessons. The question is, how many will you apply? The beauty of Japanese wealth-building strategies lies in their simplicity and longevity. While flashy investments and high-risk trades may grab headlines, Japan's approach focuses on slow, steady growth, prioritizing financial security over short-term gains. Each of these secrets offers a blueprint for building a resilient financial future. Whether it's adopting mindful spending habits through Cabo, leveraging stable dividend strategies, or exploring community-based investing like Tanamoshi, there's something here for every type of investor. So, what's your next move? Will you embrace the patience of Zen investors? Or maybe you'll take a page from the samurai strategy and make that one bold financial decision. Remember, the purpose of this video is to broaden your horizons in the realm of investing. It's not about handing you a ready-to-eat financial meal, but about teaching you how to cook one yourself. Investing comes with its share of risks and uncertainties, so it's crucial to wear your research hat and consult with qualified professionals before making any financial decisions. Keep in mind, past performance in investments is like last year's weather forecast. It doesn't necessarily predict what's going to happen tomorrow. Always weigh the risks and tread carefully when putting your hard-earned money at stake. If you found value in this video, I highly recommend watching my next video, which is the perfect complement to this one. Hit like, subscribe, and don't forget to comment more if you want me to dive into other global wealth secrets. Until next time, build smart, build quietly, and build for the future.